Hello, our beloved learners. It is teacher Shoppi Eria from Wuna Education Services. I welcome you to our second session. We are covering cash flow statements or the cash budgets. I advise our learners who haven't watched the first lesson to go and watch so that we can move together. Okay, in this second lesson, I've brought you a worked up example about the cash flow statements or the cash budgets. I'm going to read it out and then show you the worked out example for the example I've given you. So this is our worked out example. It goes, the following information was reviewed by First Pharmacy Uganda Limited for the month of January, February and March 2024. The first Roman is the business had an opening balance. It is also called balance brought down in the month of January of UGX 500,000. The business made monthly sales of UGX 450,000. Roman 3, the projected monthly purchases were UGX 300,000. The business expects to incur UGX 500,000 for salaries and wages, but this will increase by 20% in the following month after the first month. Roman 4 says the business expects to sell off an old vehicle in the month of February at UGX 800,000. Roman 5 reads monthly electricity bills of UGX 50,000 are expected to be made. Roman 6, business expects to receive a commission of UGX 150,000 in the month of March. Roman 7, business manager withdrew cash for personal use UGX 50,000 in the month of January. The next Roman, the business expects to receive a loan of UGX 800,000 from Post Bank in the month of February. Then Roman 9, the business received computers from Centenary Bank worth UGX 10 million as a donation for the corporate relations. 10, business received rent income from its tenants of UGX 90,000, UGX 150,000 and 300,000 in their respective month differently. Roman 11, business received cash from the debtors of UGX 50,000 in the month of March. Now our question is required is prepare cash flow statements or cash budgets for First Pharmacy Uganda Limited for the different months. That is our worked out example. That is our example we are going to be working out. This is our example. So I'm going to be showing you how we have worked out the example. Okay, that is our example. So this is our worked out example of the cash flow statement. Now when you're preparing any cash flow statement or any cash budget or any financial statement, we always begin with a title. And the title is written on 3 lines. As you've seen, I wrote First Pharmacy Uganda Limited. The first line is always written, we always write the business name. Second line is for the financial statement or the account, as you've seen through cash flow statement. Then the third line is always for the month or the period. Here it is for the month of January, February, March 2024. Don't abbreviate. Okay, so that is our business name. The first line is for the business name, second line is for the name of the account or statement, but in this case it is a cash flow statement. Then the third line is for the period or the month. So this is the format of the cash flow statement. So we have 4 columns. The first column is for the details, the second column is for the first month, second month and the third month. Now when I was discussing in the previous lesson, I told you that the first entry post in a cash flow statement is the balance brought down. Now I said balance brought down is always that money that remained in the previous month or year. This, let's say, assume this is January. Now when we make a profit, or even if it's a loss in January, we have to carry on that money in the next month. If it's a profit, we carry on that profit. If it's a loss, meaning we are going to pay that loss even in the next month. So it is called cash balance, or balance brought down or brought forward. So in our question, we had a cash flow. We have the business had an opening cash balance of in the month of January of UGX 500,000. So we post our 500,000 here because it was the money that remained in January. So after we posting the cash balance, or balance brought down as 500, we go and look for the cash inflows. We said cash inflows are those incomes that are going to be received by a business in a given period of time. So we first track transactions we first track for the transactions that brought money into the business. Okay, following our example here, we had the business made monthly sales of UGX 450,000. That is Roman 1. That is Roman 2 rather. So if the business made monthly sales of UGX 450,000, meaning we have to record this 400,000 in all the month, meaning it was monthly, meaning it applied in January, February, and March. So we record this because monthly sales are cash inflows. So we record the 450,000 in January, February, and March, as we did it here. So monthly cash sales 450, 450, 450. That is Roman 2. We are done with Roman 2. Then let's go to Roman 3. We are dealing with purchases, like cash inflows first. The projected monthly purchases were 300. This is a cash outflow. We leave it first. Then we go to the cash. We look for cash inflows first. Roman 3 is a cash outflow. Then the business expects to incur UGX 50,000. It expects to incur UGX 500,000 for salaries and wages, but this will increase by 20% in the following month. This is a cash outflow. Then we look at Roman 4. The business expects to sell an old vehicle in the month of February, UGX 800,000. Remember, I've said that under the cash inflows, sale of any business asset, it is a cash inflow. If a business sells off its, let's say, old vehicle, meaning it is going to earn money from the sale. So we record sale of an old vehicle. They said our question was it was meant to be sold in the month of February, meaning we're going to record this 800,000 in the month of February. It is when the old vehicle was sold and money was earned. Then Roman 5, electricity bills of UGX 50,000 were expected to be made. This is a cash outflow, so we wait for that. This is a cash outflow, and we're dealing with cash inflows first. Then the business expects to receive commission of UGX 150,000 in the month of March. So we said commission received is a cash inflow. So we record this in cash inflows here. So we shall say commission received. The question was it expects to receive 150,000 in the month of March. So we record commission received of 150,000 in the month of March. We continue looking for more. The business manager withdrew cash for personal use, UGX 150,000 in the month of January. When I was discussing this in the previous lesson, I said that drawings for personal use are not recorded in a cash flow statement. So in this example, we see the business manager withdrawing money for personal use in the month of January. So we don't this transaction Roman 7, we don't record this in a cash flow statement because he withdrew money for personal use, not for business use. Then the business expects to receive a loan of UGX 800,000 from Post Bank in the month of February. So this is a loan from the bank. This is a loan from the bank. So it is a cash inflow. So we call this loan from Post Bank, and the question was it is going to be received in the month of February. So we record 800,000 in the month of February. So loan from the bank 800,000, record it in the month of February. Then we have business received computers from Centenary Bank worth 10 million as donation for the corporate relations. When I was discussing in the previous lesson, I said that we don't include donations in kind. That if someone donates computers in let's say computers or assets which is not money, we don't record that in cash flow statements. We only record if the business received donation as cash. But Roman 9 won't be recorded because it is a donation in kind. Then Roman 10, business received rent income from its tenants UGX 90,000, 150,000 and 300,000 in different months respectively. Meaning the business is receiving money from its tenants, so it is a cash inflow. So we say rent income, they said respectively in January it received 90,000, February 150,000, then 300 in March. Okay, then business received cash from debtors of UGX 50,000, 50,000 in the month of March. If the business received cash, if someone takes goods on credit, is called a debtor. Now, if the debtor pays the money, meaning the business is receiving cash, but if they just take the goods without paying the cash, we don't record that. If they take it on credit without paying the cash, we don't record that. But if they pay with cash or they repay what they took on credit before, we record that. So we are going to record the business is received cash from debtors UGX 150,000 in the month of March. So we are going to record cash from debtors. It received 50,000 from in the month of March. Okay, now if you look at our question here, we are done with the cash inflow. Now, after we dealing with the cash inflows here in our questions, monthly cash sales, sale of old vehicle, and all that, we add up in the first month. Don't add up these other month. First add up in the first month. So we have this balance brought down as 500, 450, 90,000. Then we add and get 1,040,000 as our total cash inflows for January. So then we go to the cash outflows. I said cash outflows are those transactions that are making the business lose out money or spending out money in the business. We are going to look out for them here. We are done with Roman 1, we are done with Roman 2. We have Roman 3 as our cash outflow. The projected monthly purchases will be 300,000. That is, it is a monthly purchase, so meaning it is a cash outflow. It is an outflow, so we call it here cash outflow. It applies to all month. 300 January, 300 February, 300 March. Then we have what we call Roman 3 expects to incur 500 for salaries and wages, but this will increase by 20% in the following month after the month of March. So the business expects to incur 500,000 for salaries and wages, but this expects to increase by 20% in the following month after the first month. So we are going to this is a cash outflow. So they said salaries in the first month are going to be 500, but it expects to increase by 20% in the following month. So meaning we're going to increase this 50% by 20% in the other month. So we have, if you increase 20 over 100 times 500 is 100. So you add up and get 600 in February and March. Our last cash outflow is Roman. We have electricity bills, and they were 50,000. They were monthly electricity bills here. So we add up the cash outflows in the first month. 300 plus 500 plus 50,000, we get 850,000. So we raise the total cash inflows in January and total cash outflows in January to get our net cash position in January. Meaning in January, when you raise the money the business received and the money the business earned, the balance was 190,000. So we carried this 190,000 in the month of January to February here. So it is 190,000. It is the net cash position for the month of January. We carried it on and we post it here in the month of February because it is the next month. So we add this and this and this and this to get 2,390,000. This one becomes our total cash inflows for the month of February. Then we add up the total cash outflows in the month of February, 300, 600, 50, and we get 950,000. So we also raise the total cash inflows in the month of February, that is 2,390,000 minus 950,000. We get 1,440,000. So this is our net cash position for the month of February. So 1,440,000 is carried to the next month, which is March. So we carried this net cash position to the month of March. So 1,440,000 plus this plus this plus this plus this, we get 2,390,000. It is the total cash inflows for the month of March. Then we add up the total outflows in the month of March also, and we get 950,000. We get 1,440,000. That is how we prepare our cash flow statement. Now, as you see here, this is the balance brought forward for February. Then February's net cash position becomes the balance brought forward or brought down in the month of March. Thank you for listening and thank you for viewing. It is Teacher Shoppi Eria from Una Education Services. We advise you to go and download learning materials from our different social media platforms on Facebook and all those different media platforms. We shall share links and all that. Thank you for listening.